Welcome to another episode of the Market Makers in the Middle East and Africa podcast. I am your host, Abrar Hussain. Today I speak to Philip Bahoshy, the founder and CEO of MAGNiTT. Philip, welcome to the podcast.
Thank you very much for having me.
Yeah. Philip, very interesting career and a very successful one, helping startups and organizations across Middle East and Africa. Tell us about your story.
Yeah, so I'm a British Iraqi, brought up in the UK, studied at LSC, did consulting, and that brought me out to the region back in 2008. Did 3 years at Oliver Wyman across the whole of the region. Following that, I worked at Barclays, doing strategy for Barclays Middle East. Did my MBA at INSEAD, and then came on to several years later start MAGNiTT. And it's kind of my journey, but I've been here in the Middle East since 2008. And really that's been core of the proposition of what we're doing today and the opportunity that we continue to build from.
Mm-hmm. And Philip, what inspired you to start MAGNiTT? And tell us more about the grand vision behind MAGNiTT and what you want to achieve.
Yeah, well, when we started MAGNiTT, it was very different to what it is now. So what inspired me, I mentioned the MBA, and during my time at INSEAD, and we both went to INSEAD, when did you go?
Oh, I went to 20.
So I was in 2013. So at the time, I was enamored by entrepreneurship, and I did many of the entrepreneurial classes. And I always remember the Startup Bootcamp, which probably is the inspiration of where this all came from, where you start on a Friday pitching an idea, and then by the end of the weekend, you're going to investors and pitching it for funding. And during that weekend, you do a crash course in the startup space. And at the time, mine was focused on what has now become Vivino. It was with students that were based out of Fontainebleau, trying to support in the selection of wine. But one of the things that we had to do as part of the exercise was try and identify potential people that were investors and or mentors to support with the actual startup. So if you remember at the time, there was an internal platform and you could go and filter certain alumni. And I identified probably 20 people that were wine and VC and emailed all of them, and one person responded. And so several years later, when I kind of came out of the family business and decided I wanted to do something myself, one of the pain points I identified was how do you help connect people that are interested about a subject to the community. And so the version 1 of MAGNiTT was very much, hence the name MAGNiTT, to connect, was born out of a connection platform for entrepreneurs and investors and the wider startup community. Several pivots later, we focused on the data, and data is very much core of what the proposition is. It was always at the back of my mind that the more information you gather through the connections and building out the double side of the marketplace, both the startups and the investor community, you can actually build out this database of information that is very proprietary. And it was in 2018, basically, as we started publishing multiple reports on the state of venture capital here in the Middle East, that we were able to do a seed investment round. And since then, our goal and vision has always been to kind of disrupt and continue to build out a platform that focuses on, for now, private capital, everything outside of the public markets, with a focus on venture capital, private equity. And for the next foreseeable future, it's to become the leading player outside of the US and Europe for the emerging venture markets that we basically cover. So at the moment, Africa, the Middle East, and Southeast Asia, and to really cover everything outside of the public markets for those geographies.
Mm-hmm. That's very interesting. How do you differentiate from other venture capital data platforms?
Look, there's many international platforms. One of the key things is because we've been born out of the Middle East, one of the challenges that you have, especially in emerging venture markets, rather than just emerging markets, is that information transparency is opaque. And we have had to learn the art of gathering the data, verifying the data, ensuring the consistency of the data for those markets. Effectively, there's a lack of regulatory bodies that you can pull this data from. The second thing is that we've understood that emerging markets or emerging venture markets are very different to the US and Europe. If you think in context, I was doing a podcast recently with the managing director of Endeavor Catalyst, one of the leading VCs that invest in emerging markets. And he said, only this year, for the first time, did you see more capital deployed outside of the US than in the US. And to think historically, the majority of capital was in the US. This is the first time every country outside of the US, includes China and India, etc., has now shifted in that direction. So what we've seen is that when you look at trends, insights, analysis, market dynamics, that the emerging markets is somewhat different to those of the US and or the European market. And so our focus is to have more comprehensive data in the markets that we cover at a price point that's more affordable than a global platform or an international platform from that perspective.
Mm-hmm. And Philippe, the way you mentioned that it's not only focusing on ventures, right? It's anything outside of the public market. It can be for private equity.
That's the ambition. This year, we will be bringing out, hopefully in time for the release of the podcast, our first private equity report. We'll be rolling out private equity data onto the platform, which is another challenge for the region in terms of accurate data and representation of the private equity space. But over the next couple of years, the goal is to move into private credit, look at infrastructure, real estate, which are all non-public data sets that are comprehensive and inaccurate or underrepresented in the markets that we're basically focused on.
One of the challenges you mentioned is getting the accurate data. What other challenges you face initially and how you overcome them, and how you are kind of overcoming this challenge of having accurate data about the companies, about the other dynamics that you are dealing with? And one of the things is, for example, in the markets where you don't have taxations, right? Even getting the data on the size of the company, on the revenue, how you manage those, or how you plan to manage those?
Look, I mean, there's multiple questions there. Yeah. So getting the data remains a challenge in any market. So we have a team that's focused on that, specifically by verifying all of the information through public references, through private conversations, anything that can give us an advantage in being able to have more accurate proprietary data. In the end, there is no regulator. I think one thing that for people that are outside of the region, when you go to the US, many, if not 90% of all companies are registered out of Delaware. If you go to the UK, it's the company house. Here, the operating companies are within each of the jurisdictions. So whether it's the UAE, Saudi Arabia, Pakistan, Turkey, but the financial holding company, which is the entity that represents most of the financial information, tends to be BVI, Cayman Island, Delaware, or even Singapore. And so in the end, you are mapping together the data sets that are available through either building relationships, data teams that are finding public available data sources to make it comprehensive. And that's something that we've had to build up over time as part of our journey. In terms of other challenges, I think that we're very dear to the fact that to make good decisions, whether you're a government, whether you're a corporate, whether you're an investor, you need to rely on quality data to make informed decision making. Here in the region, it's almost like a double-edged sword, or it's a chicken and egg. Without the data, you make information decisions without it. When you get more data, you need to learn how to use it, and then you have to rely on it. So while we've continued to strive to improve the quality of our data, the insights of the research and the analytics that we publish, people also need to be comfortable relying on that to make decision making, and at a price point that is not cheap. We're not aiming to be a retail proposition. We want to educate the larger institutions to be able to do that, so that there's a need to invest. Whereas if you go to the US or Europe, many of the leading government agencies or investors have got several platforms because it's a competition for data, and they make sure that they have the most amount of data to be able to make the most informed decisions. So that's something that we're continuing to educate the clients, retaining the clients that we have with more insights and intelligence. For those that are looking to become clients, explain the importance of that data. And that's a challenge that remains one in the emerging venture markets that we roll into, specifically when you're looking at Africa and other jurisdictions.
Apart from data, when you started, what other challenges you faced?
When I started, I mean, it's to get to product market fit. Ultimately, we pivoted a bunch of times from when we started. When I mentioned that we were a connection platform to start off with, we thought there was a need for a connection platform. In venture, for instance, it's very personal. You have to build a relationship with the person, with the founder, with the investor. So the need for a platform to solve for that wasn't necessary. We then had built out what was aiming to be a LinkedIn platform. So we had a job board, and then you had profiles, and you could have perks, and it was almost a social network. But you realize that the size of the community is extremely small, and it's very difficult to compete with a LinkedIn or other type of social media platforms. Then we moved into a subscription-based model, which was online, but the quantity of people that you need to kind of build that out was a little bit of a challenge. But then once we moved into the enterprise solution, we really found that product market fit and a focus on stripping out things that were making noise for us and focusing on the core of the proposition to solve the needs of the key protagonists in the at least venture and or private equity and private capital space moving forwards.
Mm-hmm. And how has MAGNiTT contributed to the growth and visibility of the startups in the region, specifically helping them, get fundings or the visibility?
It's a great question. It's one that I try not to answer myself. You have to speak to the startup or the investors or the government agencies. But what we believe is extremely important is the transparency of information. And I repeat, you can only make good policy decisions if you have correct benchmarking. You can only raise the right amount of funding if you have accurate data around the size of rounds and valuations. You can only understand what sectorial thesis you want to build if you can understand the players in the markets. You can only understand the ROI of the market relative to Southeast Asia or the US if you have the correct benchmarking. So we always bring out our annual report on the state of venture capital, which gets shared. That provides a lot of information on what's happening in the ecosystem. So we like to think that we're shedding transparency on an ever-growing market for different protagonists to be able to make their informed decisions.
Some success stories, ventures, or VCs or corporation who have benefited using the MAGNiTT platform?
Yeah, again, I can't speak to the client specifically, but for instance, if you just choose each segment, if you take a government, for instance, we produce the annual report for venture capital in Saudi Arabia, and they use that as a cornerstone for the growth. Now, last year, Saudi Arabia grew 33% year on year. They were one of a very few number of countries globally, and the only one of the top 3 in the MENA region to see an annualized growth. If you go back 5 years, and I remember when the CEO, Dr. Nabil Koshak of the Saudi Venture Capital Company, wanted to publish the report, there was hesitation because the size of investment was around 150 million. And yet last year we hit 1.3 or 1.4 billion of investment. So when you talk about the success story, that level of transparency, and we publish this report twice a year, gets shared to international investors coming to the region, shared to government officials that understand what's happening both locally and internationally, shared with startups that are looking to understand who the key players and the protagonists. So that is a great cornerstone example of how content has become a success story for sharing the story of a specific geography. When you look at big tech companies, and you talk about Oracle as an example, not saying anything about Oracle, but big tech companies who are trying to identify, we often get asked, who's the next biggest player? Who should we be targeting? Well, how do you identify them? It's too late when they're Kareem or Souk and they're already on that trajectory. And so you need to identify all the companies that are prior to that stage, and we can create proxies and tools to help identify alerts of what type of companies are growing, raising funds, and etc. For them, they're able to build business development tools based on the information that sources. And then others, right now we're seeing a lot of interest from Southeast Asia into the Middle East, and Middle East into Southeast Asia. Historically, we saw the rise of Pakistan and the growth of the venture capital ecosystem there, and people interested to learn more about those players. And so if you're an investor looking for a co-investor, if you're a startup looking for an acquisition, those are the type of success stories that we hear from our clients that the platform can help them achieve using the database, the platform, and the insights.
Mm-hmm, mm-hmm. Now, you mentioned about KSA. How do you see the current landscape of investment across the region, Middle East and Africa, and what are the bright spots?
Yeah, look, so to give that context, we've seen a roller coaster of about 5 years of venture capital here in the region. Leading up to COVID, you saw steady growth. Even at the time, it was always a record amount of growth, but we were coming from a relatively low base. The COVID pandemic was an unfortunate circumstance for many, and not to forget how difficult it was at the time. But for digital companies, on one side, everyone was scared, so nobody was investing. On the other side, we became reliant on the use of technology in the region in a way that we had never done before. If you look at Saudi Arabia, they enacted laws that basically made payments using cashless payments as mandatory. Because of COVID, they didn't want people doing deliveries and pickups and having to have people touch to make payments. So they made it a requirement that you could use cashless payment. That digitalized the use of credit cards. That digitalized the use of your Careems, your Deliveroos, your hunger stations. People were at home and required food delivery. And those were some of the few companies that were able to operate in what was a full lockdown. That really changed part of the mindset and the use of technology in a region that was already embracing technology for a youthful population and digitalized economy. Coming off the back of that, because of the reduction of interest rates to kind of re-stimulate the economy, you saw a rapid growth of liquidity globally and in the region. And as a result of that, many of the government agencies, many different ecosystems were thriving by encouraging companies to hire, import talent from abroad. And you really saw an explosion of growth of both new companies being formed as well as companies raising funds for an accelerated progression of their growth at all costs model. Then you began to see going into 2022, once interest rates started to rise as a result of the increasing inflationary pressures globally, that interest of venture capital began to get tampered. And as a result of that, there was less liquidity going into the global landscape. This year, at the end of 2023, was the second progressive year of decline of venture capital globally. And here in the region, we haven't been immune to that. And as a result, liquidity and the availability of capital decreased. Now, when that starts happening, all of those companies that were spending and relying on the next investment round started to slow down. And they had to focus on unit economics. We've seen the highest level of failures of companies last year and the beginnings of M&A activity where valuations have come down. But the reality to your question, and to answer it more directly, is that with the need for unit economics, you've begun to see the dominance of several hubs. So right now, the UAE and Saudi Arabia, who've benefited from higher oil prices and the ability of sovereigns to continue to deploy capital into this space and focus on it as part of their national agenda, whether it's D33 here in the UAE, the focus in Abu Dhabi, and in Saudi Arabia as part of Vision 2030, they've continued to at least maintain, if not grow in the case of Saudi Arabia, investment and policy towards venture capital and startups. The rest of the region has seen kind of mixed results. And again, lest we not forget the geopolitics for the region, but even if you look at a country like Egypt, the devaluation of the currency has made it very challenging for companies operating in Egypt to continue to be unit economic profitable or able to justify that. And therefore, many of them are having to migrate. You look at the Levant, many of the companies still have some of their back office in those geographies, but are having to relocate to the UAE and Saudi Arabia to raise funds. And now more than ever before, you've been seeing international VCs, international startups coming to the region to continue to set up and benefit from the availability of capital from potential sovereigns and investors. So we're in a little bit of a lull period until I believe that interest rates come down, where we start seeing a return of that investment activity. But it's not necessarily a bad thing, as it's a correction in the market. It's a readjustment of the business models. And it's an understanding of what are the real policies that will enact and drive the need for this technological growth. And I'm a big advocate for, again, the importance of data and understanding the trends. But if you're investing now, it'll pay off once it picks up again in the next 18 to 24 months.
Apart from venture capitalist space, I feel there has been a good momentum on PE deployment, right, across the region.
Yeah.
Can you share some details on that, what's the interest of PEs and how do you see that landscape changing?
I think it's been quite interesting. I mean, the history of PE in the region is one that I'm continuing to kind of learn about. And of course, there's been some challenges specifically here. But I do think that now it's become a little bit more opportune. Some of those hyper-growth tech companies that were growing at all costs have definitely seen a retreat in their valuations. And so if you take a private equity model where you look to make an investment now for an exit in 6 to 7 years as a majority investor, it's an opportune time to buy companies or acquire or make PE investments in companies that are slightly distressed valuations compared to their peaks of the last 2-3 years, with a long-term view of exiting them in the next 5 to 6 years, while we continue to see the growth of the public markets and international players looking to deploy their capital in new asset classes. So I do really think that we're in a prime starting of a cycle of private equity interest, and the need that there are many companies that are growing to late stage. One thing that I discovered was growth capital, where private equity companies make minority stake investments in late stage companies that are moving towards IPOs. We're beginning to see this talk and development of companies, not just in the tech space, but also in the offline non-tech space, that are looking to move towards the listings. And you hear a lot of talk in Saudi Arabia, the MEA. Here you have the different exchanges that are also looking to boost that. But the reality is, when you look at the US, we've seen the dampened level of IPO listings for a long period of time, which again makes it opportune for PE to invest, to pick up in 2 to 3 years or longer for that landscape. So I am a firm believer that right now there is an opportunity in the private equity space that people are interested in. But again, it's still contingent on the interest rates because the cost of capital remains high.
Yeah. And any specific industries or areas where you see that there is still a lot of growth on the new venture side where people can come and capitalize?
So I think I referenced that conversation with Alan Taylor, and we were talking about emerging markets and what tends to happen in emerging venture markets. The first industry that tends to always get disrupted is the e-commerce or the product transfer delivery industry. Why? Because people always buy goods. It's just you're making the availability of those goods and then connecting them to individuals much more simplified by being able to deliver it to your doorstep. I still remember coming back to 2009 here, trying to get 1 or 2 products delivered home, and it was neon impossible. So being able to digitalize that at scale is one of the areas that tends to be the first. And that doesn't matter. And the reason I reference Alan is whether it's in LATAM or Southeast Asia, in Pakistan, in Turkey, or the Middle East or Africa, the first sector to get disrupted remains within that space. The second one is the equivalent, but for people or things. So the Kareems of this world, the truckers of this world, the point to point of not just goods, but entities. What we've now entered is the kind of third phase, which is the financial services, is right now the highest growth opportunity that people are interested in globally, as well as in the emerging venture market space, is the financial services sector. Having worked in Oliver Wyman's financial services sector and at Barclays, you begin to realize that in the region, it's not to be critical, but antiquated in terms of the financial services offering that exists, which makes it ripe for disruption. And even when you look at the subsectors of financial services, while there's a lot of hype around the crypto and the blockchain and the kind of those type of propositions, the reality is that the investment are in buy now, pay later, point to point, exactly the same as your people and your products, but for money. And right now, that's the sector that's seeing the highest investment in terms of capital and the total number of transactions. Your question is what has the highest opportunity. Now, the challenge there is in any market that has not seen as much exits or ROI on the investments, investors tend to be risk averse. And I gave you the example of the roller coaster that we're in. We are in somewhat of a depressed market right now. So the risk appetite to go into sectors like deep tech, to go into sustainability, to talk about ed tech and health tech, which people have always been mentioning is the next wave, has been somewhat tampered by the fact that the exit opportunities, the growth opportunities, the talent opportunities, the patient capital to invest in research and development has been somewhat lagging behind the other sectors. I do assume that if we were to have this conversation in 5 to 10 years, many of those sectors will have seen growth. But right now, in this risk-off environment, the focus tends to be in the financial services.
And do you see that? I mean, what I have seen is there is still a lot of space on the SMB side. For example, SMB lending. I think pay now, buy later is still kind of becoming. We have some two large players, but I think there is a lot of space on the SMB side.
I think so. I think across the whole of the financial services. I mean, even if you look at the banking system, the ability to use credit cards, remittance transfers, insurtech, even neobanking and the likes, there is a lack of infrastructure. Now, all the governments are wising up to this. You have sandboxes that are being announced recently here in the UAE. You have all of the regulators looking to focus on how to facilitate financial services, SMB lending, even portfolio management and tracking. But it requires an understanding of the market. It requires risk appetite. It requires capital. Margins are very thin in many of those businesses. It requires mass scale. And therefore, it takes time for those type of things to develop. But we're definitely underserviced relative to many other geographies, which was exactly the same in e-commerce and in logistics until that began to kind of pick up post-COVID.
Philip, now Middle East and Africa is very different when it comes to different countries, right? You have Africa, you have KSA, UAE, even Pakistan. How companies, if they want to scale and do kind of business in all the region, how they can manage these complexities?
I think it's a great question, and it's what I was basically alluding to. I was talking about the pools of capital being very localized now in the UAE and Saudi Arabia. I think you have to flip it on its head and also work out what are the countries that are the most interesting for scalability and profitability. So in the current market environment that we're in, we are seeing many companies focus on UAE and Saudi Arabia. And one phenomena, having moved or gone and visited Southeast Asia myself, is that when you look at other emerging venture markets, you see similar patterns where people are focused on Singapore and operating in Indonesia. Does it still make sense to go and operate in the rest of the GCC? Does it still make sense to go and operate in Egypt? Does it still make sense to go to Levant? Or do you now need to look at opportunities that exist in other continents that have potentially higher GDP per capita, higher size of market? And in the last 12 years, as MAGNiTT has continued to cover those emerging markets, we've seen more startups from Southeast Asia and Singapore predominantly come and look to set up here in the UAE and get market capture in Saudi Arabia and vice versa than ever before. And to answer your question of how, it's not easy. It's not meant to be easy. I recently had a conversation, I think it was on a podcast, with someone asking what were the lessons or the advice that you would give to people. And the number one is you can't come in with a international mindset. You have to localize your talent proposition. You need to hire locally. If you're going to operate in a geography, don't expect that you can import the talent. One or two lieutenants, people to drive the agenda, the culture, but the need to embrace the importance of hiring locally is key, especially if you're looking to go to Saudi Arabia. Understanding the cultural nuances, the business nuances, and the difference between those cultures is what makes companies successful. And when you look at the case study examples of success, whether it's the famous Careem acquisition from Uber, your Amazon, many of the small tweaks they did versus their international competitor to localize the product proposition is what helped them differentiate. And it's really listening to your customers and providing a local sales force and talent force to support that is key, but also picking the right markets.
Now, coming to the a follow-up question to this, how does MAGNiTT helps investors find the right opportunity, either in this region or you mentioned about South Asia? So how you can help?
Look, I mean, ultimately, we're a database platform. We've got 37,000 companies listed on the platform with the history of their investments, an overview of the company, information about the founders. So we're not going to tell you what to invest in. People have their theses. People have their views. People will meet certain companies. But when you're doing your due diligence, and it's not legal due diligence, it's company due diligence, it's your benchmarking due diligence, we can support you in that decision making. I love it when I went to Southeast Asia, I met an investor there, and I asked him the question, would you be interested in investing in the Middle East or Africa? And he was hesitant. And I said, well, look, what is there an opportunity for one of your portfolio companies? And he said, fine. We have an insect protein company that is very popular in Southeast Asia. How many insect protein companies are there in the Middle East and Africa if they were to be introduced to them? And so I hesitantly had to put insect protein and actually having no idea what I would find. And 18 companies turned up across the Middle East and Africa, all of whom had raised more than $1 million of funding that he was unaware of. And he went from being skeptical to asking me to export all of the data to share with his team so that they could check out their websites and see who they were, when did they raise, who were their investors. That is an example of trying to demystify assumptions about a particular market through data and accuracy of information. And that's how we help them, rather than then telling them, this is who you should invest in and this is a good company.
You know, what makes a company investment worthy? You know, be it a tech company, a venture or established company, when the investor looks, or you being an investor, what you will look and then decide, look, this is where I have to invest.
Yeah, look, I'm not an investor, although I've made one or two angel investors, so I can't speak specifically, but of course I speak to many of them to try and understand. I think at the core of any, I always say, because I've had to learn this the hard way, venture capital is not a charity. And sometimes people forget that. Founders can get very riled up when they get rejected. And more often than not, and I wrote a post on this on LinkedIn recently, and I think that resilience and perseverance and really embracing the idea that failure is part of the proposition is core of why 90% of companies fail and 10% are potentially successful, let alone the number that actually exit afterwards. And so if that's the core of that proposition, then you need to backward engineer why would a VC who is not doing this for charity, and assuming that you are a VC that has an LPGP structure and they are giving you money as an asset class that in power law or portfolio theory is one asset across many others. And we go back to the interest rates. If interest rates are at 5.5, 6%, you can go to a bank and get 5%, or you can go to get a corporate bond at 7%, and you can go to the stock market at the end of last year and get 40% if you're on the NASDAQ, or 25% if you're on the S&P, and it's continued to rise this year. Why would you invest in venture as an asset class? You are looking for exponential growth year on year. And as a result of that, you need to backward engineer what are the type of companies that can achieve that. And so you really need to identify a problem that has a tech solution and not come up with something you think is a problem, but is an actual problem. And that's probably the hardest part. It needs to be scalable, because if it's not too big and if it remains small, then it will never get to the size of an exit that makes it interesting for a venture capital investment. You need the right team. And at the early stages, as much as people tell you it's about the idea and the revenue and etc., it's the team and the people that can implement and enact on that, which is why so many early stage investors, you can give them as much data as you want to identify the company. They still need to sit in front of the person and have a conversation to see if they want to give them capital. And for all of those reasons and many, many more, it is an emotive and logical exercise of blending subjective analysis as well as data-driven insights around a thesis and a thematic driven approach to making that investment. And if you understand that, then you need to backward engineer the type of questions that an investor is going to ask you so that you have answers to all of them. And in some ways, pitching to an investor and trying to raise capital is to eliminate the no's. Assume that an investor is already coming into a meeting with the assumption that they're going to say no. Your job is to convert that into a yes. Not to go in thinking that because they're an investor, they want to say yes, and that you're turning them into a no. In many cases, it's an uphill battle, and you need to eliminate, my team is this, the size of the market is this, the problem that I'm solving for is this, I have validation with revenue from this, etc., etc. If you have those answers questioned and traction, then that makes it easier to have the conversation, but it doesn't make raising funds easy.
I mean, that's a very good answer, Philip.
Thank you.
Thank you. My last question.
Please.
What personal satisfaction it gives you to run a platform like MAGNiTT?
So I think over the years, the personal satisfaction has become the engagement that I've had with key decision makers and key stakeholders. I mean, number one, obviously the team and everything that we've done with the team. And actually one of the personal satisfactions is the alumni of the team that has worked at MAGNiTT have gone on to work at some super interesting leading institutions, whether they're VCs, they're big tech companies. So on a personal work satisfaction, that's something that I'm very proud of, is that the alumni of the people that have worked from a company that's focused on data are now in positions at some of the leading institutions from the region. On a personal level, I didn't think I realized how much that when you look at this data day in, day out, that you become somewhat of a thought leader, I hate to say that, or someone that experiences something a little bit different. And what I always say is, I'm not a VC. I haven't got an agenda of a VC to push, because in many cases they're either raising another round or they're trying to promote their portfolio or whatever their agenda may be. I'm not a government. I haven't got a government initiative to try and drive one sector or another. I'm a data platform and I look at the numbers. And from that, I like to think that it gives me somewhat of an objective overview where I'm able to engage with the key stakeholders, whether they're potential government officials, whether they're senior management in corporates that I get invited to go and speak to. And if I'm able to enlighten them a little bit more about the sector, and for them to better understand the opportunities in that space, and somebody else can benefit from that, that's a personal satisfaction that I get out of that exercise in being able to have those thought-provoking conversations with people that can inform their decision-making.
Really pleasure to have you, Philip. And thank you very much for coming.
Thank you very much for having me.